Hello, my name is Oliver and welcome to my very personal finance channel. This is my update for the month of November 2021. I was hoping to have a bit of good news, but apparently the Omicron variant of coronavirus has decided to come to town and decimate the stock market, so that's fun. Could be worse. At least we're not looking to retire yet. We've still got a good maybe decade of buying ahead of us, so at the moment I'm considering the whole of the stock market on sale. And looking at our portfolio, as you can see, we've got did I do these ones? As you can see, we're down, we are down, we're down. It is the same across the board. Every one of our investments is down over the month. We've been hit really hard. Absolutely fine. Like I say, that was just everything on offer. So I suppose happy days because we're buying. And I think that's an important distinction with investing mentality. If you're doing it over the long term, little short term movements like this don't make much of an impact to you. All it means is you should buy some more. And with that in mind, I'll move on to our purchases for this month. Okay, so purchases for this month, we purchased 50 Aviva shares, as you can see there, nearly £200. They cost us £3.94 each, which puts them under the £4 mark, which is good because they pay an average of 21 pence per year. So that gives us, if they continue to pay 21 pence per year, a return of about 5%, which is very good. Happy with that. Along a similar line with Vodafone, we bought another 50 Vodafone shares for £55.86. As you can see there, £1.11p, £1.11, which is underneath our average, and hopefully that will give us a decent return going forward, especially if this Starlink Vodafone project pays off. Which, knowing Elon Musk, it will for at least a little bit before everybody backs out of it. But Tesla's not doing too bad, so I suppose there is some hope there. And moving on to our dividends for the month. Like I say, I was hoping to be able to say, we've had a bit of a naff month for dividends, but it's all right because the stock market's done well. Unfortunately, I can't say the stock market's done well, so we've had a bad month in the stock market and a bad month in dividends. Still over the £10 that I want to make per month, but as we see here, we've got £16.52. So AGNC Investment, they are our monthly payers. They pay us every month and so far have done without fail this year. £9.42, great. We're actually just ticking over into negatives on them, I think. And if we do, I will certainly take that opportunity to buy some more AGNC because so far, so good. I like monthly dividends, they make me feel better. And we've got here Tesco's and £7.10, which is an average return of about 1.4%. But I did not get any of the previous dividends this year. So going forward, I think that's going to be quite a good investment for us. I'll carry on buying some more Tesco shares as soon as they drop in value, because as it stands, if we go down to Tesco's, they're still quite high. If we look at them over the year, that's where I bought in, that dotted line. I don't know if it'll show up with YouTube compression, but if it does, I bought in just down here, and so far we're all the way up here. So it's a good 23% increase. So yeah, if they drop in value, I'll buy some more. With Omicron and coronavirus still being prevalent and Christmas coming up, I don't think they'll be dropping anytime soon, but that's okay. We'll just bide our time with them. And let's chuck those into our spreadsheet. Okay, so moving over into the spreadsheet, I have chucked in those dividends, as you can see here. So we have got £16.52 in there. And that brings our average down to £21.81, which again, a lot bigger than the £10 average I was hoping to achieve, but it just goes to highlight that we've got two major spots in our portfolio where we need to up our dividend game. So we've got March and we've got November. I appreciate that that's quite a bit larger than that, but over the course of 1, 2, 3, 4, 5, 6, 7. So there's about 1,500 quid's difference between what I had in my pot in March and what I had in my pot in November. So I think March and November need addressing, which I'll start to do over the course of next year. So we'll see how that pans out. And that's everything from me. Goodbye.